Rising interest rates across the world are giving rise to more and more confusion amongst homeowners, investors, and even prospective buyers. Everyone is asking the same question: should I get a fixed rate mortgage or variable rate? Before I get started, I'm going to leave a link in the description where you can sign up for a free little ebook I put together for beginners about finance and investing. Please make sure to subscribe to the channel. I just hit 20,000 subscribers, hoping for 30,000 by the end of the year. I'll quickly break down the differences between fixed and variable, some pros and cons, then what I've been doing, and maybe a suggestion at the end. With a fixed rate mortgage, as the name suggests, you're locking in your rate and your payment over the term you choose. You can choose 1 year, 3 year, or 5 year terms. This doesn't mean you pay the entire mortgage off in 5 years. You're just resetting the payment and the rate over the life. Maybe, let's say over 30 years, you might be faced with this choice 5 or 6 times. The pros of a fixed rate mortgage: it's pretty easy. It's predictability. You'll know exactly how much your payments will be, making budgeting and managing your finances and cash flow much more manageable. Managing your finances more manageable. I'll need to reword that. You'll also get protection against interest rate hikes. If you're watching this in 2023, we've had 6 or 7 hikes in the last 12 to 18 months. If you've had a fixed rate mortgage, you wouldn't be affected until your term is up. The cons of a fixed rate mortgage: if you lock in a high rate and the overall rates drop, you could be missing out on savings. This isn't a real issue. It's not a real con. You're not losing money. You're just missing out on savings. Another issue, which isn't the case now: fixed rate mortgages are usually higher than variable rate mortgages. Again, in 2023, that isn't the case. Banks are predicting rate drops over the next 5-year term, so fixed rates are actually lower than variable, which is rare. Now let's talk about variable rate mortgages. There are 2 kinds. There are fixed payment variable and variable payment variable. It's a little confusing. Fixed payment means the monthly payment stays the same, but as the interest rate increases or decreases, your split between interest and principal will change. As the interest rate decreases, you'll pay less interest, more principal. The issue people are having now with fixed payment variable mortgages: they're not paying back any principal, as their loans are being extended from 25 years to 40 to 50 or even 100 years in a worst case scenario. With variable payment mortgages, your split between interest and payment and principal stays the same. So the amortization stays the same, but your payment will increase or decrease depending on the overall interest rates. I always recommend choosing the variable payment mortgage. You want your payments to decrease if rates go down, which is great, but you also want your principal to continually be repaid if rates go up, even though you'll be paying more in monthly mortgage payment. The pros for variable, I feel like I've already mentioned, but I'll outline again: lower initial rate. Variable rates usually start lower than fixed interest rates, saving you money initially, but obviously this changes over time. And then there's potential for savings. If interest rates decrease, your payments will decrease too, allowing you to save money. The cons are unpredictability. Variable rates can make budgeting more challenging, as your monthly payments can change, which is what I'm currently experiencing. Vulnerability to interest rate increases: if the prime rate goes up, your mortgage payments will increase as well. The next question is, what should you choose? Should you take fixed or variable? If you have variable now, should you switch? If your term is coming up soon, what should you do? It's tough because it depends on the current rate environment and your personal scenario, but I'll show you what I've done after this. If you're someone who values stability and prefers knowing exactly what your monthly payments will be for the entire mortgage term, a fixed rate is the better option for you. It provides peace of mind and protection against potential rate hikes, which is what we're experiencing. On the other hand, if you're comfortable with some level of uncertainty and believe that interest rates are likely to remain stable or even decrease, a variable rate mortgage could work in your favor. It offers the potential for cost savings, especially if rates go down. Here's the issue: over the long term, variable rate mortgages have won over fixed, meaning you would have saved more or paid less by going variable. But that's historically. That doesn't mean it will always be the case. It doesn't mean that's the case now. Currently, variable rates in Canada are like 7%, which is horrible. If you look at the 1980s, when rates hit 17 or 18%, we could potentially get to that scenario now, which means it's trouble for every variable rate mortgage holder, including myself. Here's what I've been doing with 3 mortgages. I have 2 fixed, 1 variable. I'm playing the fence. I'm playing both sides. I have one fixed mortgage, 5.5%. This is a pricey one. I didn't want to risk variable because this is my biggest mortgage. The current payment is $4,500. I didn't want to hit $5,000 or $6,000. So I made a good decision by going fixed because rates have been increasing and I would have been screwed. My second biggest mortgage, I took a risk here. I decided to go variable. My rate initially was 4.79, fixed was 5.5. So I was thinking, hey, rates already went up 5 times. If they go up 3 more times, I'll be breaking even. What's the worst that could happen? Well, take a look at this. The worst is happening and my mortgage is 7.14%. My payment went from $2,700 to $3,700 in a year. So I took a risk and it's clearly not paying off. I'm upset, but also it's a risk I took. I never expected all these rate hikes when it already went up 4 or 5 times when I made my decision. My last mortgage is super small. I went fixed. I didn't really care what happened here. My payment is only $1,100, so why not? I went fixed and it's working out. To summarize the entire point of the video, if you like taking risks and can afford potentially higher payments, take the leap and go variable. If you like budgeting, consistency, and peace of mind, go fixed. Here's my personal opinion. I think the government has ruined the country and they need to increase rates until the entire middle class is eroded and the top 1% control everything. So my recommendation is go fixed until the country collapses. Thanks for watching.